Hi, this is My Time Television covering United States stocks. This video is being broadcast simultaneously through a partnership with Mijihun Television. Especially, we are holding a year-end event together with the Mijihun channel. If you look below this video, you'll find a link that offers the best and biggest discount. It's a lifetime 50% discount. So annually, it's about 200,000 won. If you break it down monthly, it's about 15,000 to 16,000 won, which is the cheapest way to use choice stock. So, since we're holding an event for Christmas at the end of the year, we hope you'll show a lot of interest, especially for those who participate in the event. In addition to the lifetime discount benefits, I'm filming a series of educational videos called Elementary School, and we're providing links so you can download all the feedback and PDF textbook files included in those educational videos. So you can still download them now. I hope that by using the textbook and watching the lecture videos together, it will help you gain more knowledge and investment skills about American stocks. And finally, on January 3rd at 10 a.m. Korean time, we are preparing a live session with Ji-hoon Mi and Chul Choi. So, in the first half of 2026, Chief Executive Officer Chul Choi will analyze the stories of 5 promising companies that we should pay attention to, and he will also organize the quantitative analysis, valuation, and other aspects. This way we can see from both quantitative and qualitative perspectives which companies are really good. And among those, together with the Chief Executive Officer, we will make our picks and try to have an enjoyable time. So this is a privilege offered only to annual premium members. Thank you everyone. Please don't miss this chance. I hope many of you apply. Yes, today's video continues the last one and covers a wise investor's shopping list. I'm going to introduce each stock one by one now. Previously we covered 2 stocks per video, but sometimes the focus became a bit blurry, so from now on we'll introduce 1 stock at a time. I'll try to keep each video around 10 to 12 minutes so that it's not too burdensome for you to watch. I'll do my best to prepare it that way. Today's company is Netflix. So if you come to our Netflix choice stock site, where we provide our service and search for Netflix, you'll see that the current stock price is $94. The trading signal indicates to wait and see. Before that, there was a sell signal at $117, so we haven't been holding it since then. The current cumulative return is 287, which means that Netflix's trading signals on choice stock are among the most accurate for any company. That means when this company gives a buy signal, it's definitely worth trying and not missing out, because it's one of those companies with a very high probability of success. Look at the top right corner to see the heart icon. If you add it to your watch list, when Netflix changes from hold to buy signal, you'll get a push notification. So at that time, you can check and see, now there's a buy signal, and it will be a very good time to consider making a purchase. First, I'll take a look at the diagnostic score for you. It's 87 out of 100 points and ranked 25th among all listed United States companies. So then, why did a sell signal come out for a company like this? I'll explain this part later, but since the stock price trend is turning downward, a sell signal was issued mainly to secure profits. If you look only at the company's fundamentals, there's no major problem. Looking at the Pentagon chart, financial stability, profitability margin, and business competitiveness are all 100 points. Cash generation ability is 80 points, and future growth potential is the only weak area at 55 points. If you want to see how these scores have changed compared to the past, you can click the same period last year button at the bottom to check. So a year ago it was 83 points and now it's 87 points, so we can actually see that it has increased. The company improved and things got better, so why did the stock price fall so much? I'm going to take a look at these aspects later from the perspective of valuation. If you look below, you can see the scores for each of the 5 categories over the past year. For growth, the score went from 50 to 70 and then to 55, so it dropped and then recovered a bit. Monopoly power improved from 95 to 100 and financial stability also improved from 90 to 100. As for profitability, it's just 100 points, which means the margin rate is really good. Looking at cash generation as well, it's being maintained very well at 80 points. So in terms of growth, it's growing at a moderate level, which is a bit disappointing, but in all other aspects, it's almost perfect. We can judge that this is a very top-tier blue-chip company. First, let's scroll down to the bottom here and we're going to take a look at the earnings. If you look at the earnings, there were times in the past when it grew very rapidly, but as of the end of December this year, and looking at the data for the end of December 2025, it's 15, next year is 13 in sales growth, and the year after that is 11 and 2. So in terms of sales growth rate, it's decreasing a bit, but if you look at earnings per share, this year is 27, next year is 27, and the year after that is 20. You could say this is a company that maintains an earnings per share growth rate of over 20 and also achieves at least moderate or above average sales growth. So, it can't really be considered a super high growth stock, but it's a company whose corporate value is increasing well through high margins. The performance in this area keeps improving like this, so if sales go up by 13 but earnings per share goes up by 27, it means profitability is getting better. Actually, as quite a lot of users have been using this company, there have been a lot of questions. So, the question was whether Netflix would continue to grow in the future, and Netflix gave an answer to this. The first was an increase in subscription rates. Looking at the United States basic plan in dollars, it used to be $11.99 in the past, but now it's gone up to $17.99. But when you look at the company's overall revenue and work backwards, it shows that the churn rate of subscribers isn't significantly high. Even though they raise the price, they're starting to set up a strong economic moat that makes people feel like they have no choice but to keep watching Netflix. That's how we can see it. Are you going to watch something from another company, or do you still prefer Netflix even though it's pricier? So, the customers who subscribe to and watch Netflix have still been retained, and this has significantly increased the company's revenue and earnings per share. For now, we can say that this strategy has worked well. The second thing is advertising. They launched a lower price plan with ads in the middle, and people wondered how many would actually watch it. A lot of users signed up for this plan, and it turned out to be quite successful. In Korea, for example, there's a partnership with Naver and similar companies, so if you use a Naver card over a certain amount, you can watch Netflix for free for a month. I'm actually using that too, and there are ads that come up once or twice in the middle, but it's not that inconvenient. So it's worth noting that Netflix's various subscription plans are really taking hold in the market in this way. Next, if we look at it from the perspective of profit margin, if you look at this financial chart, shall we look at it in relation to this company? Looking at it over time, the operating profit margin rose from 4 in 2015, peaked at 20 in 2021, then declined in 2021 and 2022. But if you look at it recently, as of 2024, the operating profit margin has risen to 26. And if you look at the sum of the last 4 quarters, it's gone up to about 29, so it's now at a very high margin rate. So, since Apple's operating profit margin is around 31 compared to Netflix's past profit margin of around 15 now, it's become a high margin company at a pretty high level, creating a lot of value. I think we can look at it this way. And recently, there was another issue. If you look at the news, you'll see that Netflix was involved. I think it would be good to read the content once. Between Netflix, Paramount, and Warner Brothers, who will come out on top? Jong Myung-chun-ho. Well, we can't know for sure, but for now, Netflix has announced that it will acquire Warner Brothers. They announced they would acquire it for $82.7 billion, but we don't know yet if this will go through. There are antitrust regulations and things like that, so it needs to get final approval. Now, they're going to absorb it, they're going to merge. If Netflix doesn't go through with the merger, then companies like Paramount will probably acquire it. Even if Paramount acquires it, it would be disappointing for Netflix. Under Warner Brothers' acquisition, the goal is to further strengthen their monopoly, so they would have bought even more. Even if it goes over to this side, the number of over-the-top competitors in the market is actually decreasing as each one gets merged. The range of choices keeps getting narrower, so it's not that bad for Netflix. But since a final decision hasn't been made yet, I can just say that Netflix is currently pursuing the acquisition. Well, coming out from global leadership. If you look at the recent stock price trend, Over the past 6 months, the stock price has dropped by about 23%. On our side, a sell signal came out at this time. When the sell signal appeared, we thought holding on to it wasn't the right choice, so the sell signal was issued. Afterward, you can see memory's stock price dropped significantly when the sell signal appeared. Compared to before, it seems to have dropped by about 15, around 15. The current stock price keeps falling like this, and if you look at the exponential moving average chart below, it's similar. A sell signal has appeared and now it's in a reverse alignment, so the stock price is showing significant weakness. Even if you look at the midterm signals, it's the same. The midterm signal started to turn at the end of October, and now the gap is widening a lot, so even from a midterm perspective, it's showing very low momentum, which is the only drawback. So, when we look at the valuation, the current price is $94, and the 121-day line is at $110, then there's $107, $99, and $94, all coming in a complete reverse alignment. Unless some really special momentum or news comes out for Netflix, it's not easy for the price to surge in the short term. In terms of growth and other aspects, it's showing above average growth, and from a valuation perspective, it's come to a pretty good price. So it's a company worth paying attention to. So if we look at the valuation, over the past year, this company went from being undervalued all the way up to the upper range of the valuation, which is considered overvalued. Then it dropped down, and now it's in a range that's even lower than undervalued. It's in a very undervalued zone right now. If you look here, the current stock price in this range is at a level we haven't seen in the past year. This is about the lowest price it's been. But right now, it's at this level. At this level, the valuation is really damaged. So the question is, will the value of this company go up in the future? Earlier, we reviewed data like earnings per share, right? Although the growth rate has dropped a bit, this part is clearly trending upward. In the end, the stock price could stay in this undervalued area for a long time. The current price is definitely very attractive, but from a supply and demand perspective, it's on a downward trend. I don't think there's any need to buy in advance while taking on that volume. So, since this company is currently undergoing an adjustment, there will be periods where the moving averages overlap and some time-based adjustments are needed. But whenever there's a signal or the supply and demand situation breaks through, you can buy at any time. Is the company not worth buying? So what I want to say is, if you register a trading signal here and it turns, it will change to a buy signal like this. A signal will come out, and referring to that buy signal is probably one of the best ways. For those wanting to trade independently from signals, valuations are currently very low. Then, from this range down to the lower range, it's a price where you could consider dividing your purchases into several steps and planning how you'll buy. But since there are areas where if the supply and demand turns, you can't know how far it will drop, what I recommend is to wait a bit and make sure there's a definite turnaround. Even if you buy now at a slightly higher price, even if you buy at a price that's gone up a bit, there are still plenty of companies with enough room to go from undervalued to fully valued. That's how you should understand it. So I'll wrap up my review of Netflix here. Thank you for watching.